Top three things in my notebook this morning. Number one, the U.S. dollar. Number two, commodities. And number three, China. First, on the U.S. dollar. What a day. Really, what a 48-hour period or a two-trading day window period with the U.S. stock market closed on Friday. Dollar went down, rates went down, and then bang, everybody, I guess, dogpiled that on Monday morning, and the whole thing reversed. Again, dollar up this morning, again, after holding immediate-term trade support for the U.S. dollar index, which is currently 96.61. Moreover, the euro versus the dollar, which is a more important move to me, fades at 110, which is immediate-term trade resistance with no support currently to 107. So again, we're right back into the soup with the yen down, euro down, Nikkei up, and that has been the trend. So again, the trend remains your friend. We still remain bullish on the dollar from an intermediate to long-term perspective, and yes, we understand the short-term headwinds. Point number two, commodities. Short-term headwind number 1, 2, and 3 for the dollar is indeed the commodity market going straight up as the dollar went down. It was a 5.3% bounce on the CRB index. Again, I'd contextualize that importantly from its 3-year low. So again, if you look at the CRB index, its current risk range after closing at 220, it has downside to 209 and upside to 221. So you're at the top end of the range for the CRB index. You're at the bottom end of the range, or you were in the dollar. You're at the top end of the range in the euro versus the dollar. It's all the same thing. It's called the correlation trade. And again, the correlation trend remains bearish on commodities and bullish on the dollar. Finally, China hits a 7-year high last night on the Shanghai Comp. As Darius was saying to me this morning, it's almost like China goes up 1 to 2 to 3% every single day. It was up 2.5% last night to up 22.5%. Now the Chinese are chasing the Germans for the year to date. The Germans are up 23.3% in DAX terms, whereas the Shanghai Comp, as I said, is up 22.5% with Hong Kong closed. So again, as both growth and inflation slows in China, you continue to get rampant speculation that there will be stimulation. And again, stimulation is, again, what the Chinese market is trading on the hope for. And I did a real conversation, by the way, with Steve Roach on China, amongst other things, which you can find on YouTube. And those are your top three things.